We're making sense of these markets with Jim Cramer on the floor of the New York Stock Exchange. Jim, you said you were looking for another Tuesday. Well, this is a Tuesday, and it's not a good one. Is this the Tuesday you were looking for?
Yeah, well, it's supposed to not be a good one. I told you yesterday that I thought China was going to be real bad, and it was real bad. I thought our markets would be hit very hard on it. Our markets being hit very hard on it. I thought that the dollar would stay weak against the euro because the German bond market's being roiled by Chinese bonds. They're selling their bonds in order to be able to prop up stocks. I said that that will fail. So it's kind of true to form. You start getting into the cheat sheet of where stocks traded at Tuesday. Obviously, that was a chance to buy, not sell. Remember, we had a bear market and then a bull market. So get a look at your ranges, find some stocks that you feel comfortable with, and buy with the cash that you have.
Jim, does this Tuesday feel different than last week? Last week was a lot more dramatic with that big Monday sell-off. Does this week feel a little different?
It can be more pernicious because it's so thin that someone who really has a bent and wants to knock down stocks can do it far more easily because the market has very little depth. I was looking at McDonald's and the stock was just down fractionally. But then I saw that the volume was 700,000. Typically, I would have expected at least 3-4 million. But ETFs and the lack of individual investors have made things much worse on the downside, much better on the upside. So just all I'm saying is find stocks you really like, get that good yield because interest rates aren't going higher. Recognize that Stanley Fischer was saying if we get this kind of turmoil, he may not move. I don't even care if they move. I mean, obviously I don't want them to move because I don't think it's right to. But if they do it, we'll find a way to make money then too.
Are there 3 stocks you'd like today, for instance, that you'd look at?
Yeah, we like Lockheed Martin because the Saudis are obviously arming themselves. That's one of the reasons why they're pumping so much. And Lockheed Martin is the logical guy you go to in that situation. Looking at Biogen, thinking, geez, you know what? There's a biotech stock that's going to be down, I don't know, about 150 points from its high. That's getting very interesting. And then EOG, if it comes back down, it's a high growth oil. We made a little trim. Maybe you get it back in the 60s. That could be positive.
All right, Jim Cramer, thanks so much. I'm Rhonda Schaffler for TheStreet.